Investor. A stock exchange online simulator, fundamental analysis and capital groups.
Your assignment as chairman of the board will be to increase the equity of your company, by acquiring or selling different securities on stock exchange. Those securities can be either simple investments, enterprises you will own in no more than 50% of capital, or parents' subsidiaries, owned in more than 50%. In this last case you have the possibility to control the operations of those companies and decide about the strategy they will adapt. But remember, the time is limited to 14 trading sessions. You are not alone on the stock exchange market and your competitors will be also active. Please key in your investor identification password and press the button. There are not less than 12 opportunities for investment, being virtual enterprises of different sizes, in different sectors and acting on either goods or services fields. The main simulator screen is divided into two sections. The first upper part presents the situation of investing company and the lower part describes different possible opportunities of investment. One of them is selected and shows graphic presentations of market demand and sales, evolution of profits, evolution of stock exchange quotations, quality of offered products and their price, along with some financial data. Detailed internal analysis of security is available, with description of products, calculation of different ratios of company balance sheet as well as price-to-earning ratio and dividend yield. Time evolution of certain of those coefficients is also possible. Data describing all securities being opportunities for investment can be easily compared. Student who uses the simulator can build his own criteria for selecting securities fulfilling his investing or divesting strategy. These are general stock investment rules suggested to users of Investor Simulator. There are two possible sources of investors' profit: dividends, 30%, paid every trading session by securities, and profits realized, only once, when selling stock. This corresponds to two short and long-term stock exchange strategies. Fundamental analysis evaluates a stock based on its intrinsic value, fair value, through the analysis of various marketing as well as financial factors. Technical analysis instead evaluates a stock based on charts and trends and predicts its future price. Investor uses mainly fundamental analysis, although some technical analysis tools are also available. Extended help is available for students at any time. A built-in simple expert system can be also useful. Let's take an investment or a divestment decision now. Move the slider to the right to buy, or to the left to sell, a given percentage of stock of a selected company and then specify the transaction price. Students have to send their investment decisions to the school moderator by internet. There can be up to 26 of competing student teams, which can correspond to more than 26 players if some of those teams are composed of more than only one person. No dedicated computer connection is necessary, as all investor players use the public net. The moderator can be located thousands miles away from his students, and every of them can also work anywhere in the world. The same data on computer screen are available for all members of each team, however only one of them can act as chief executive officer and send final decisions to investor moderator, in the end of each trading session. Stock quotations depend on various marketing as well as financial factors describing the security and on number of investors willing to buy or sell it simultaneously. Suppose investor A wants to sell 45 shares of a stock not cheaper than $40 each, investor B wants to buy 30 shares of the same stock not higher than $35 each, investor C is buying 20 shares of the stock for a price not exceeding $38 and investor D is decided to purchase 20 shares of the security but cheaper than for $32 each. Suppose also that at the next trading session the quotation is $33.25 and there are only 10 free shares of the stock for purchase. Who will buy and how much? The simulator moderator has the full insight into all students' data. He can also send them back appreciations, questions, and resume of situation. If necessary, he can change the length of simulation as well. Acquiring more than 50% of capital of a company leads to becoming parent in a holding structure. Owning more than 50% of issued stock of a company, you control her operations and may decide about the strategy she adopt. In that case you will act as an active manager, instead of playing just as subsidiary passive administrator. In investor, managing subsidiaries means deciding about quality and price of products they sell. And in case your decisions in that field satisfy your subsidiary customers' needs and requirements, this can become source of additional profit and higher subsidiary stock quotation. According to accounting principles, cash, inventories, fixed assets as well as liabilities of all companies owned by parent in more than 50%, subsidiaries, have to be added up and presented as a sum in consolidated balance sheet. This consolidated balance sheet should also include the value of all investments as well as equity being not mutually compensated between parent and his subsidiaries, such as stocks purchased by parent or other holding components in no more than 50%, non-subsidiaries. The purchase cost of a stock is included into investor's balance sheet when she buys it and remains unchanged in time, even if the actual quotation of the stock changes. Therefore, the values in investor's balance sheet may differ from stock current quotations. And, as long as an investor doesn't sell securities he owns, he doesn't earn, or lose, money, no matter how expensive they are on stock exchange. Investors' profits, or losses, are still only virtual and even may never occur in case the security quotation changes. The goal of this simulation consisted of increasing the equity of students' company, by acquiring or selling different securities on stock exchange. Those securities were either simple investments, enterprises owned in no more than 50% of capital, or parents' subsidiaries, owned in more than 50%. In this last case, students had the possibility to control the operations of those companies and decide about the strategy they were adopting. Here is the final screen of investor where the winner, having the highest value of equity, is discovered.
What are the topics covered in Investor? They include not only basic concepts of stock exchange market, as principles of stock quotation as well as methods of securities trading, but also detailed fundamental analysis, holding management, and even consolidated balance sheet. For using Investor Simulator, students have to master corporate finance. There can be up to 26 simultaneous players, 12 different securities to invest in, either goods or services, and 14 trading sessions. Everything works on MS Windows, no other applications are required, except internet access. There is no more efficient way of teaching company management than business war games. Learning by doing is always much better than learning by listening or learning by reading. Computer simulations provide to students immediate and measurable results of their work. Contact us if you want to experience this in your university. Or charge us to run Investor with your students. We will take care of all operations, including didactic assistance, and will provide the results they achieved.